Welcome to Bloomberg Markets. I'm Vonnie Quinn. The S&P 500 soaring to a session high right now, even with potential potholes ahead, such as the CPI print, the Fed minutes in just a little bit, and of course, Hurricane Milton. Let's get a quick check on those markets now. As you can see, the S&P 500, even though it's been a fairly choppy session, it's up about 0.6% now, very close to its all-time high at 57.88 there. The Nasdaq 100 as well, up 0.7%. A few standout stocks like Palantir, Nvidia, we'll get to that in a moment, but otherwise it's sort of a mess session for most of the stocks under the hood. There's 5 basis points between the 2- and 10-year yield. We're waiting on a 10-year auction coming up at 1 p.m. Eastern, but right now that 2-year yield is looking very close to that 4% mark. And just some midday movers on the equity side. First up, Alphabet shares falling on antitrust concerns. The U.S. Justice Department adding to Google's regulatory challenges. A filing outlining the agency is considering forcing Google to sell off parts of its business to mitigate its dominance in search, down 1.5% off its lows now. Also, Nvidia has been swinging between gains and losses right now, down about 0.2%. Huge volume, though. It's making an effort to continue its rally for a 6th day, 3 times the volume of that of its next most traded stock. It's up around 12%, bear in mind, in 6 sessions. So once again, down about 0.2 now. And Alibaba, ADR is down about 0.7%. That's well off the lows. We just got a headline a few moments ago that there's a PBOC policy paper out there that suggests there may be some additional bonds. Mainland China stocks sold off after the pre-Golden Week euphoria. The next potential catalyst, though, is a Ministry of Finance briefing Saturday, which may reveal new fiscal measures, may have more details on those bonds as well.
I've always been among those that believe this last mile can be the most difficult, because now you're trying to get from something in the neighborhood of 3% inflation to 2%. And over what period of time can you do that and still ensure that the public believes you will get back there, that those inflation expectations stay anchored? So I remain pretty focused on where we are with the current inflation dynamics.
To the Federal Reserve, former Kansas City Fed President Esther George speaking there at the Citadel Securities Global Macro Conference in New York. We also have all of those Fed speakers today and the September FOMC minutes in less than an hour that may shed some more light on the thinking inside the Fed as we await tomorrow's CPI report, of course. So let's bring in Michael McKee, Bloomberg International Economics and Policy Correspondent, who will be breaking those minutes just a little later on from the Fed. Michael, before we get to the CPI, do you think there's anything marginal extra that we might learn from today's FOMC minutes about September's discussion?
It'll be interesting, perhaps more so than the minutes usually are, because we'll be able to get a sense of how many people were on one side or the other, perhaps, and then how it all came together to do a 50 basis point cut, why they thought that was important, and what they thought the economy would get out of it. Also, of course, everybody on Wall Street wants to know what we might learn about what they're going to do next. What markers are they looking for, and what kind of policy options are they considering? Is another 50 something that is even on the table?
Yeah, so we know that Mickey Bowman dissented and she has spoken since then, so we know some of her thoughts, but we don't know what other discussions went on around choosing the 50 basis points. And we also know that Fed Chair Powell can have quite the strong voice himself. Michael, since then, there's really been no consensus on whether that was the best move for the economy or not, was there?
No, there's no consensus on it, although everybody seems to have accepted it as a reality, and the Fed has done that, and it doesn't mean that the economy is falling off a cliff. The data have been pretty good. Just look at last Friday's jobs report. The question now going forward is, does the economy need another 50? Is the Fed in any hurry to get to whatever they think the neutral rate might be, or are they willing to sit back and take it step by step? We heard from the Dallas Fed president, Lori Logan, today, saying she's in favor of step by step. Let's go cautiously and see what happens. We'll get a sense over the next couple weeks of whether the rest of the Fed feels the same way, and go into the next meeting with a pretty good idea probably of what they'll do, except for the fact that we do get PCE numbers and jobs numbers while they're in the blackout period.
Right, exactly. And we have tomorrow's CPI print and then Friday PPI, a little bit more inflation data. But what would we need to see tomorrow in order for anybody to sort of make up their mind on something, to be more decisive on what the next move should be?
Well, if we had a surprise in the CPI, as we did with the jobs report, that would scare a lot of people if inflation suddenly shot up. But there's very little chance of that happening. Economists are pretty good at forecasting what's going to happen to the price indexes. So it doesn't really mean a whole lot except for this. It gives the Fed, if we get the numbers they expect with a slight decrease in inflation again, gives the Fed permission to react then to the employment side of their mandate. As long as inflation is going down, they can pay more attention to the employment side, although they'll continue to repeat the idea that they're looking at both.
Balance of risks. Michael, thank you. He'll be back at the top of the hour with those minutes for us. That is Bloomberg's Michael McKee. Now turning to Hurricane Milton, Florida Governor Ron DeSantis spoke earlier today about the state of the storm.
Hurricane Milton is still a major, very strong hurricane. It's currently a Category 4 hurricane with maximum sustained winds of 155 miles per hour. That is just a whisker shy of a Category 5. And while there is the hope that it will weaken more before landfall, there is high confidence that this hurricane is going to pack a major, major punch and do an awful lot of damage.
It's also notable that government responses to Hurricanes Helene and Milton have become a political point of contention between Governor DeSantis, former President Trump, and the White House. For more on all of this, we're joined by Bloomberg reporter Michelle Jamrisco. So, Michelle, we've heard from the Harris side that Ron DeSantis didn't want to take a call from Kamala Harris. We've heard from Donald Trump that this might disproportionately affect states where he is doing well. What is the state of play when it comes to the campaigns and the hurricane?
Well, inevitably, Vonnie, the politics is creeping in. I mean, all sides are saying this should not be politicized. This is a disaster zone, an unprecedented disaster coming on the heels of Hurricane Helene, and everyone needs to kind of get involved and put their nose down. But yeah, as you can see, there is this debate both from the Trump side, where he's going to these storm-ravaged areas already and saying the resources are inadequate. He's faulted the Biden-Harris administration, particularly Biden, for being away in Delaware during the first storm. And so you see these sort of politics around who is where and how is it being addressed, as well as a lot of battles over misinformation. And the White House has been particularly clear on this in terms of calling it un-American. Biden saying yesterday it was un-American that Trump is calling out these falsehoods around how the funding is being used and whether it's being funneled to migrants, which is just completely false claims so far. But also, you know, the bottom line being that both candidates, both Trump and Harris, are fighting over, you know, who is dealing with this more responsibly, who would deal with it more responsibly as president. So you see VP Harris obviously in an unusual position in her official capacity as vice president, joining the briefing that's happening now at the White House, but also she's joining it virtually, but also, you know, having to answer for, you know, how she would address these things and why she would be in better position to address a disaster like this than Trump.
And Michelle, we obviously don't know the full impact of this current storm yet, but it could be pretty bad. Do we know how fast campaigns can make sure that, you know, and states as well can make sure that people can vote if they need to, and that, you know, everybody has the identification they may need or what documents they may have been able to bring with them from their homes?
Well, it's a good and it's a very open question at this point. I mean, as you know, the states all have different rules, and some have been revised even since past election cycles on how to early vote and what the mechanics of all that are. So there is the hope that, you know, these storm-ravaged areas can still kind of conduct the business as usual and get the word out to voters as to how to vote and that it will be done seamlessly in the way that they had planned anyway.
Michelle, thank you so much for joining us there. That's Michelle Jamrisco in Washington, D.C. Coming up, Hurricane Milton due to hit some of the most populated areas in Florida. What's happening on the ground and what will the long-term impact be on real estate in that economy? That's all next. This is Bloomberg. This is Bloomberg Markets. I'm Vonnie Quinn. This hour, we're tracking Hurricane Milton, now a Category 4 on a Level 5 as it barrels towards the coast of Florida. For more, we're joined by ABC News reporter Rena Roy. Rena, officials say this could be the storm of the century. How are conditions?
Yeah, Vonnie, officials are really urging people here in this area to take this storm seriously. They say that it could be the storm of the century here in Florida. You can see the wind is already picking up. The rain has been picking up consistently. We are expecting Milton to make landfall tonight sometime between 9 and 11 o'clock, likely near Sarasota, just south of Tampa. And as a Category 3 or a 4, it is still early and things are fluctuating. We are keeping a very close eye on it. The big message, though, from officials is that time is running out to get to safety for people who are in mandatory evacuation zones on the water. A lot of people have listened to those warnings, but for those who haven't, authorities are reminding people of all the shelters that have been set up across the state. The big concern here is the high winds and the storm surge. We could see up to 15 feet of it in Sarasota. Vonnie?
Rena, thank you very much. Do stay safe, and we will check in with you again. That is Rena Roy of ABC News. Well, Milton comes on the heels of Hurricane Helene, another storm that the region is still recovering from, with more than 200 dead and an estimate $47 billion worth of damage. Many homes have been destroyed, with more feared to succumb to Milton, of course. It all comes amid a nationwide housing shortage. For more on the long-term impacts of these storms, we're joined by Ken Johnson. He's a real estate economist with expertise in the state of Florida. He's also the Walker Family Chair of Real Estate at the University of Mississippi. Abigail Doolittle joins us too. So, Ken, when you're looking at these storms, and it's obviously just approaching and making landfall, and we don't know how bad it's going to be, how do you model it out, the best and worst scenarios?
So, at this point in time, there seems to be two possibilities. One, the storm stays a little north and goes through mostly through Tampa, Orlando, and up the I-4 corridor, or hopefully it jogs a little further south, and then it's going to go across an expanse of Florida that's really not that populated, and the damage will be far less.
So what hurricanes, Ken, are you thinking of comparing this one to? Ian, or we just heard Vonnie talking about that this could be the worst hurricane of all times. And also, in terms of if Ian was $65 billion worth of damage, what are you thinking about around Milton right now ahead of its landing?
So if Milton stays on the I-4 corridor, this is probably going to be the most expensive hurricane that has ever hit Florida, maybe the most expensive hurricane in U.S. history in terms of devastation and destruction. So, but again, the hopes are that it stays a little further south, goes across a part of Florida where there's not that many inhabitants. But if it stays on the I-4 corridor, we probably have a much more difficult issue to deal with. Hopefully it will lessen too as it comes on shore.
Okay, so whether it goes on that I-4 corridor or if it goes south, clearly there's going to be a lot of devastation. Unfortunately, that tragic humanitarian devastation, but the economic, what does that do to affordability? Because right now we have an affordability crisis, in housing. Is that going to really take a ton of supply offline there?
Absolutely. That's what the greatest worry is. Short term, if we use Ian as a model, as Milton comes on shore, the devastation and destruction will take housing units out. It will be most immediate. The most immediate impact will be in rental. You'll probably see a spike in rents. We saw that where when we look back 2 years ago, right after Ian, apartments or multifamily housing was renting at a 12, 13, and 14% premium in the areas of Coral Springs, Northport, Tampa. Orlando was very high at the time too. Today, these are back down to almost a neutral. They're barely at a slight premium, 1%, maybe a slight discount, 1%. But after Milton, they're going to go back up. Housing prices, it's harder to say. Modeling after Ian, housing prices went kind of flat. They stopped going up, which is not necessarily a bad thing in Florida.
Yeah, how long does it take for prices to drop like that, Ken? Because obviously the longer term impact would likely be that maybe it's more expensive to end up living in a place like this that can be in the eye of a storm, or insurance costs are more expensive and potentially it drives prices down. But does that take a long time?
Oh, the chances of prices going down in Florida, I think, are pretty small, no matter the pattern that Milton takes, no matter the path that Milton takes. The demand to live in the state is still growing at an exceptional rate. We've been hit roughly by 300 tropical storms in the last 100 years, and very often it's predicted that Florida won't progress, but they always do. People like to come to Florida, strong economic climate, otherwise than hurricanes, really good climate. People love it in Florida. They keep coming to Florida. But short term, this presents real problems in terms of affordability. Probably you're looking at, we're still not back up to speed in the Southwest Florida region. So you're looking at a couple of year rebuild before we're back to normal.
So you really just anticipated my next question, Ken, in terms of people moving to Florida, because of course Florida is the area where we've had such an influx of, or a migration, I should say, out of the north to Florida. Do you think that, you're saying you do not think that this will have an impact, and does that mean that there's not going to be a real economic growth impact on Florida either?
So the question really is, do we get smaller or do we just grow less fast? Maybe that's how you put it, but I think that's the latter of the two. People have been, every time there's been a major hurricane in Florida, there's been predictions that people are going to start moving away from Florida, and that's never happened, and it's not going to happen this time. It might slow down the overall growth for some point, for some period of time, but no, this is not going to be the end of the Sunshine State by any means.
And thinking more nationally, and that's good that it's not going to be the end of the Sunshine State, what is the contagion effect on insurance? Because it's interesting that insurance effect costs could, of course, soar if it is $65 billion or more worth of damage. Is that going to raise premiums for, say, people in Oklahoma or here in New York?
So the real question is who insures the insurers, and they're reinsurers, and those are mostly international in nature. And so they do spread the risk around. So there won't be a direct impact on the cost of insurance in other parts of the country, homeowners insurance. However, you will see an indirect effect, and you might see marginally higher rates depending on the destructive nature of Milton, and we've had several other hurricanes. But that's true of all devastation. So something that goes on in Japan actually gets an indirect effect through the reinsurers in our U.S. insurance market.
It's amazing. Ian was only 2022, you know, so these things are happening sort of more and more often. Is Florida better able to handle something like this than some of the other southern states that also see this kind of weather event quite regularly, some of the Gulf and the Panhandle states?
You would think so, because we get the most practice at it. I hate to say it that way, but yes, we are pretty used to storms. This one in particular, though, is very, very problematic. The size and scope of this is pretty phenomenal. So we're very nervous about this. We're probably a little bit better at the cleanup. We've done it several times, and therefore I think when I say we, I mean the state of Florida will bounce back. We'll bounce back pretty quickly.
For sure, and let's hope the human impact will be very minimal as well. Ken, thank you so much for joining us. That is Ken Johnson from the University of Mississippi, and our thanks as well to Abigail Doolittle. Coming up, 2 new ETFs taking advantage of alternative assets, and just a month into trading, they'll be the topic of our weekly ETF report. That's next. This is Bloomberg. This is Bloomberg Markets. I'm Bonnie Quinn. Time now for the weekly ETF report. Today we're looking at 2 new ETFs launched by Palmer Capital Management, based in Kansas City and listed on the New York Stock Exchange in September. They focus on CLOs. Joining us now with more is Christopher Long, Chair, CEO and founder of Palmer Square. Christopher, thank you so much for joining. So talk to us a little bit about the motivation behind these 2, not just 1, but 2 new ETFs focusing on CLOs, and the appetite that must be there for them, or you wouldn't have done it.
Well, we've had so much demand from our wealth management client base to bring these to market. And, you know, the reality is it's a great risk return product, one that investors have traditionally only had in the institutional market. And our desire was to not only obviously work with existing clients who want this sort of return stream, but also honestly expose ourselves to a lot of other investors where we know this product will add value.
So obviously demand for CLO equity and general CLO risk appetite is growing and continues to grow, and you just pointed that out yourself. But what's in these? Is it CRE? Is it what is in this?
Great question. I mean, if you look at the end of the day, what the investor is getting is corporate America. It's a diversified industry set of bank loans. So first lien, first to get repaid, top of the capital structure. And if you look, there's been almost no defaults dating back to 1994. So that corporate America exposure and bank loans in particular, which offer a lot of protection and sit within a CLO, are really, honestly, a great exposure for anyone looking to get premium yield in a portfolio with low risk.
Well, I know your PSQA is CLO debt rated AAA and AA by your own CLO debt index, but PSQ's PSQO is focused on value across corporate and structured credit. So there is a little bit of differentiation between the two. Where are you seeing the more demand?
Well, both. I mean, we've had a tremendous amount of flow already. I'd say with our PSQO, which is more of a multi-asset play, I think investors particularly like our ability to be active, to move across AAA CLOs, BBB CLOs, BB CLOs, and then of course the whole corporate market. So I think as these markets get increasingly, more volatile, we obviously have a lot of items coming up on the agenda that hopefully people will tune into your show for, but CLOs have long showed that they can withstand those and also thrive in those periods of volatility. So we're providing a diversified exposure across corporate credit and structured credit we think is really important for investor portfolios.
Now, you're obviously known in the space for a long time, so you definitely have the reputation. But how do you compete with others that are also now launching these types of ETFs? It's not something we've seen before, but there's a bit of a raft of them coming to market.
Well, we're number 1, 2, or 3 in the world each and every year as far as CLO issuance. We're also one of the most active traders of everything from AAA CLOs to CLO equity. Long distinguished track record. So we really believe our senior team, our investment process, which is disciplined, and then quite frankly, we've been able to outperform, absolute and relative type benchmarks for a considerable period of time. So we just have such confidence in our team and are so thrilled now that literally every investor out there can access what we're doing with PSQO or PSQA.
Just briefly, Christopher, anything we should worry about that these types of things are now in ETF wrappers?
No, I would say from a risk return perspective, ironically, right now, actually, the risk side's going down. As you look at the Fed on a path to reduce rates, it's actually reducing borrowing costs for companies, which is improving interest coverage ratios for bank loans and corporate America broadly. So you're actually seeing an increasing picture in this environment of what was already, honestly, a low default situation. So I have utmost confidence that investors and flows are going to come into products like Palmer Squares in a considerable fashion here going forward, given the opportunity.
Christopher Long, CEO and founder of Palmer Square, thanks for joining. Coming up, more turbulence for Boeing. Stick with us. This is Bloomberg. Welcome to Bloomberg Markets. I'm Bonnie Quinn. Let's get a quick check on those markets now. It's been a fairly choppy session and we're definitely off our highs of the session. Nevertheless, both the S&P 500 and the Nasdaq 100 are up more than 0.5% apiece. Honestly, most stocks in the S&P 500 are higher. If you look at the map, it's green across the board, except for energy, for example. But that said, there's small moves, except for a few standouts like Palantir, for example, which is up more than 3%. Boeing, which we'll get to in a moment, which is down 2%. But really, it's a lot of small gains and small declines. Look at the two-year yield. We have crossed the 4% threshold once again. The 10-year yield at 4.0569. Of course, the all-important inflation data tomorrow morning. And of course, the Fed minutes in just a little bit, in about 90 minutes' time, should give us perhaps another clue as to how we should think about this economy. But it really has people scratching their heads right now. Of course, there's all the geopolitical turmoil as well. President Biden and Benjamin Netanyahu just having a call a little while ago. We'll get the readout of what they said to each other a little later on in the afternoon, according to the White House. And that may give us, again, some more insight into the geopolitical risks out there. But let's get to some midday movers now on the equity side. Bloomberg's Abigail Doolittle joins. Abigail.
Bonnie, let's start off with a stock that's moving in the opposite direction of the S&P 500 and the Nasdaq 100. And interestingly, this is one of the big point weightings to both of those indexes. But Google, Alphabet down 1.9%. This says the Department of Justice is asking a judge to consider breaking up this company on antitrust concerns. So you can see shares lower. Responding to this, Dan Ives, however, the well-known tech analyst, saying that despite the fact that this overhang is out there, that it's unlikely to happen. Now, one area of strength for markets right now, the cruise operators. We did get an upgrade at Citi to buy of Norwegian Cruise Lines. The shares responding very well, up 10.2%. The best day since February. That analyst saying this whole space that there is catch-up potential. They are still well below their pre-pandemic highs. And apparently this analyst over at Citi thinks that the growth for sales could really strengthen from 2025 on. And then finally, you were mentioning Boeing. If we take a look at shares here, down 2.6%. The labor negotiations, the labor union negotiations, apparently not going very well. In fact, they broke off altogether. And so the strike continues. Another overhang or headwind, really, no pun intended, for the shares of Boeing, Bunny.
Yeah, for sure. Abigail Doolittle, thank you for that. And let's get more now about the Boeing labor strife from Julie Johnson, Bloomberg News senior aerospace reporter. So talks are off, Julie, and it appears to be a stalemate. Boeing's in a little bit of a pickle here. How does it move on, given that the 30% rise was not accepted by the labor union?
Yes, hi, Vonnie. Pickle is probably an understatement. And I was just kind of thinking through the many pressures on Boeing this morning, and Hurricane Milton honestly comes to mind, with the S&P warning yesterday around a potential downgrade to junk status, in the next few months. So the union and Boeing have been going back and forth. And I think the issue isn't so much that 30% proposal, it's pensions. And union members have wanted Boeing to reinstate a defined benefit pension plan that the company took away as part of a 2014 deal that was immensely unpopular. So there's some payback going on right now. Now, that might be a bit of a tall order. I mean, pensions in the US have generally gone away, and it would be tremendously costly for Boeing to reinstate it. And right now, a bit of a non-starter. So the union members, I think, need to sort of sort out how far they're willing to go to fight for a benefit that's probably not doable. And so that's part of it. The other thing that is really puzzling, this is a huge crisis for Boeing, and yet it's only been at the bargaining table with the union 5 days since members walked out on September 13. So I think there's a bit of puzzlement as to why, we're not seeing bolder action. It's the playbook's just a bit of a mystery.
For sure, Julie, and that S&P warning as well has to be making everybody very apprehensive, because of course, if Boeing is downgraded to junk territory, then it's going to be even more expensive for it to continue borrowing and keep operating and so on. The workers must know this too, though. So what is the worst case scenario here, and have the workers thought about that?
Well, I can't put myself in their headset. And I don't, I'd be really shocked if they don't get to a point of resolution in the next few weeks. I mean, the average strike by this union has been just a hair under 2 months. So we're about halfway there. And that would also, by the way, if the, averages don't always play out, but if that timeline stays intact, then that would allow Boeing some runway to get out of this jam before S&P acts.
For sure, yeah. Julie, I mean, this is costing Boeing a lot of money either way, whether S&P downgrades or not. How long can it continue this for without getting into some serious financial difficulty?
Oh, I know. The problems just sort of magnify by the day. And so this is, I really don't know. Something's got to give at some point. And the leverage right now is with the workers, so you would expect Boeing to be feeling some pressure to come back and try and break the stalemate. But we're not sure quite what they'll do.
Well, we are following it very closely, as are you. The stock down 42% year to date, another 2.5% lower in today's session. That is Bloomberg's Julie Johnson. Thank you for that. Coming up, we're monitoring Hurricane Milton as it makes landfall south of Tampa. Next, we look closer at cat bonds. This is Bloomberg. This is Bloomberg Markets. I'm Vonnie Quinn. Time now for our stock of the hour. Today we're looking at insurers as Hurricane Milton hits Florida. When it comes to cat bonds, investors are girding themselves for substantial losses as the combined destructive force of Hurricanes Helene and Milton looks set to trigger payment clauses on a scale not seen in years. For more on all of this, we're joined by Tanja Wrosch, Head of Cat Bond Portfolio Management at 12 Capital. Tanja, thank you so much for joining. What kind of activity have we seen in the catastrophe bond universe just in recent days, given the scope and scale of this hurricane?
Yeah, it was quite a lot of noise. Obviously, everyone's looking at the storm. In the secondary market, we've seen some opportunistic bids in the more risky segment, and also more reasonable bids in the more senior segment. But there was not a lot of trading that ultimately came through. People are very cautious, but a lot of talk.
It's interesting because just last year, according to Preqin analysis, the Swiss Re Global Catastrophe Bond Index soared 20%. Sorry, that was 2023. Yeah, last year. Now, does the fact that we've had two huge hurricanes sort of ruin the returns for this year?
Well, it definitely does have an impact. I very much doubt that we will reach the same height as last year. We're currently quite positive year to date. The index is up more than 10%, so you have quite a buffer in terms of positive performance. And we would expect, hopefully, that we still finish the year positively, but unlikely to be another 2023.
You talk about, and you know, in the cat bond universe, this is probably something that you talk about a lot, but Milton is an asymmetric storm. What does that mean to cat bond holders?
Yeah, what we mean with asymmetric storm is that the eastern side of the storm is actually where the most damage will likely happen. There the winds are the strongest, and because of the strong wind, you would also have more storm surge, and that means that this eastern southern location from the landfall location will have the most hit and the most damages. And this storm is super particular. It's very, very sensitive to landfall location. So 20, 30 miles south or north make billions of dollars of damages in difference, depending on whether it hits a very populated area or not. That's why this one is quite particular.
And of course, there are potential tornadoes after the original hit as well. Does that also concern the cat bond market? And at what point will we know the fallout?
Yeah, it does concern the cat bond market as well. These are covered as well, but a little bit less. So not all cat bonds would cover that. Some are limited to named storms only. So that would only entail the actual hurricane. However, if you think about it, it's very hard to tell after such a severe event whether a damage was caused by which wind event exactly. So it definitely takes part in the loss assessment, and it will take time since we're mostly thinking about landfall, but the storm will continue across Florida. So it will take a few days and likely maybe a few weeks, 1-2 weeks, for the first very reasonable, good estimates about insured loss damages.
Yes, and of course there's flooding as well, and that may or may not be part of the universe. Just wanted to briefly ask you, where do you look in terms of cat bonds if you want to look at the indices where this particular storm is affecting them?
Yeah, certainly the Swiss Re Cat Bond Index that you mentioned earlier is one of the indices to look at in terms of assessing damages afterwards. There are providers out there for insured losses like PCS that we're looking at. There are also model vendors in the space that provide their own estimates. And of course, as asset managers like us, we also put out numbers to inform investors about what we think the estimated damage will be.
Tanja, thank you so much. We do hope to check in with you again in a few days' time when we know more. That is Tanja Wrosch, Head of Cat Bond Portfolio Management at 12 Capital. Much appreciated. And we do want to bring you to President Biden, who is going to be speaking about the hurricane, the incoming hurricane. Let's just have a quick listen.
Mayor, the Tampa mayor, the Clearwater mayor, Rector, and the Pinellas County Chairwoman Peters. I offer them everything we need, everything we have, everything they need. And I made it clear to them they should reach out if there's anything more they need. I gave them my personal phone number here at the White House to contact me directly if that's necessary. Let me close with this. I want to thank the governors of all the affected areas over the last couple weeks. Florida, North Carolina, South Carolina, Georgia, Tennessee, Virginia. You know, we've been in constant contact, and they've been very thankful and appreciative of the help the federal government is providing. And I'm appreciative of all they're doing as well. And I've told them to contact me with anything else they need. We have made available an unprecedented number of assets to deal with this crisis. We're going to continue to do so until the job is done. But now I want to be clear about something. For the last few weeks, there's been a reckless, irresponsible, and relentless promotion of disinformation and outright lies that are disturbing people. It's undermining confidence in the incredible rescue and recovery work that has already been taken and will continue to be taken. And it's harmful to those who need help the most. There's simply no place for this to happen. Former President Trump has led the onslaught of lies. Assertions have been made that property is being confiscated. That's simply not true. They're saying people impacted by these storms will receive $750 in cash and no more. That's simply not true. They're saying the money is needed for this crisis is being diverted to migrants. What a ridiculous thing to say. It's not true. Now the claims are getting even more bizarre. Congresswoman Marjorie Taylor Greene, a congresswoman of Georgia, is now saying the federal government is literally controlling the weather. We're controlling the weather. It's beyond ridiculous. It's got to stop. In moments like this, there are no red or blue states. There's one United States of America, where neighbors are helping neighbors. Volunteers and first responders are risking everything, including their own lives, to help their fellow Americans. State, local, and federal officials are standing side by side. Let me repeat, no one should make the American people question whether their governments will make sure that this disaster, when it strikes, they'll be there. We will, all of us. I'm going to turn it over to Vice President Harris, if that's okay with all of you. Thank you. Madam Vice President.
Thank you, Mr. President. And Liz, thank you for the work that you have been doing. As the president said, we've been working around the clock to prepare for Hurricane Milton and to ensure that people are safe, including ensuring federal, state, and local resources are being
And that was President Biden speaking from the White House about Hurricane Milton, set to make landfall tonight, with 6 million Floridians urged to get out of the way. Coming up, we're going live to the Citadel Securities Global Macro Conference, where we'll hear from former World Bank President David Malpass. That's next. This is Bloomberg. The Citadel Securities Global Macro Conference underway in New York City, and Bloomberg's Shanali Basak is there. She's joined right now by former World Bank President David Malpass. Shanali.
Bonnie, thank you very much. David, thank you for joining us here in New York. You know, a lot of the conversation has been centered around the Federal Reserve, that stunning 50 basis point rate cut, but then the big question on how much more room there is, given where inflation stands today, what we don't know, where inflation might be tomorrow. What do you think happens next?
It's really important, and there's lots of money at stake, so that's why people talk about it a lot. My view is that the shape of the yield curve is quite controllable or influenceable by the way people talk about it and the way they think about it. So, for example, if you had a U.S. economy that was producing more, you'd be less worried about inflation, and so you could have a lower yield curve across the board. So production is really important. Another thing that's important is, where do you issue along the yield curve? The U.S. government is such a gigantic borrower. We just saw the fiscal deficit at $1.8 trillion this last 12 months. So every quarter, the U.S. government is choosing where to issue along the yield curve, so that changes the shape. also, and the third, and I'll stop there, but confidence and trust in the U.S. is a really important part of where the yield curve can settle. We've gone through this wild time where it was zero rates for a long time and then really high rates for a long time. And so the market's got to find the middle ground in that, and that's based on trust.
I'm glad you brought up the yield curve. I don't think people talk about it enough. And we only have a 210 curve now, looking at a differential at about 5 basis points. This is a yield curve that many market participants have believed would become steeper, more uninverted, as you say. But we have seen it become inverted once again. What does that tell you?
The market went through this feeling that maybe the Fed can cut a lot and inflation is really going down. But as you see, the economy is still going. They've taken that back. So we've got a flat yield curve from the 2 to the 10. But it's really important, I think, that we get to a lower short-term interest rate environment at some point, because it's so important to small businesses. They borrow at a floating interest rate at the shorter end. And so one of the frustrating things is people are beginning to say, well, we can absorb a higher for longer kind of interest rate environment. The impact of that on business is it hurts small businesses. Big businesses and the government survive, but not small businesses. And outside the U.S., same problem. They borrow at floating interest rates. So this is not really a good environment long-term for them.
Well, what does that mean in terms of how much room you think the Fed does have to cut? It sounds like you're pushing for much lower interest rates. Where should they be into the middle of next year?
I'd like to see lower interest rates, but that comes back to my first point that production matters. If you had a U.S. that you thought was really going to produce a lot, either building houses or energy production, these are really important because they feed into the costs of everything. And so if that kind of policy could be established, that would give you a chance to lower the interest rates on the short end and really get small businesses up and running.
One big concern about interest rate policy is the presidential election, this idea of fiscal spending, really igniting the economy more. We had the Committee for Responsible Budget really saying this week both candidates would add to the debt load, Kamala Harris to the tune of $3.5 trillion through 2035, but Trump would add north of $7 trillion. How do you make interest rate policy with that kind of uncertainty on how much inflation could be felt next year after this election?
You don't make it on their forecast. You know, it's the Committee for a Responsible Federal Budget. That's kind of an oxymoron. The federal budget is irresponsible right now. And so one problem with that report is it assumes that you can't get the economy going. You know, it's the CBO and forecasters are saying that under current policy, the U.S. government, the U.S. economy is going to be slow into the future, and therefore the national debt goes up. If you can change the policy and get better policies, then you can begin to impact the fiscal deficit. So I didn't agree with the numbers that came out of that report. They're just against lower taxes. Well, businesses are saying, look, if you'll give me a lower tax rate, I'll produce more. And so there should be some kind of discussion about that and included in the forecast that you're trying to work out. The Federal Reserve is using really old models. Think about they use a Keynesian model, a Phillips curve model, and that kind of permeates their thinking about the limits to growth on the U.S. economy.
Now, David, it has been reported early this year that of the potential candidates that could be under a future Trump administration for various posts, particularly the Fed, you were one of the names that have come up in reporting. Do you see yourself in the future administration should Trump win? And also, what do you think will be his biggest impact on the market if he does?
You know, we're in the midst of a campaign, so that's really more important than who the people are. So that's not so much the issue now. What you do see is this distinct difference in the two concepts. For one, you know, Trump is talking about ways to have the economy produce more. That means more energy, that means more industrial and manufacturing, and that is in part a lower tax rate for that kind of activity. And I think also also a better policy with regard to defending the dollar. Those will all work. I've been frustrated. VP Harris hasn't really said what she would do with the policy.
David, I'm sorry, we're out of time. Thank you for joining us here.
Thanks.
Bonnie, back to you.
Shanali, thank you. Bloomberg's Shanali Basak there, and former World Bank President David Malpass at the Citadel Securities Global Macro Conference. Do stay with us. We have the S&P 500 just off its session highs, now up 0.5%. That does it for Bloomberg Markets. This is Bloomberg.